Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. Happy Thursday to you. Hope you're having an amazing day. We're going to take a look here, of course, at Bitcoin. So obviously, understand best practice, big picture, see kind of what's going on here. It did end up coming down a little further than we expected, but I think we're still going to see a bounce here soon on this ascending trend. So, obviously, if you're new to the channel, just note I'm not a financial advisor. Love to teach people to trade. Hope you can learn something here today. And obviously, if you do learn something, comment below, let me know. And if you'd like to learn more and become a better trader, CryptoCache.tech is a site. Link in the description below where you can register for my trading academy. You can attend my community concept there where we all kind of learn and grow together, as well as, of course, the signals that I send out for all the trades I take. And we took some serious profits off BNB long position here recently, which coincidentally is still open because it's very, very strong at the moment. But Bitcoin is showing a little bit of weakness. However, I think that weakness is coming to an end because we're getting very, very close. So we'll look at that here and much more. So taking a look, of course, at kind of the standard stuff. Let's go ahead and start with that and then go ahead and take a look at some patterns as well. We're testing 50 on the RSI here soon. So it does tell us that somewhere in the range of 22,500 is a likely potential bounce type of situation. In other words, this is a key Fibonacci retracement level. The price action held there at the 50-day simple moving average for some time, cranked below and then cranked back up above. So again, we could very well see a dump that could come down to test this level here about 21,500. But again, the likelihood of that is moderately low just based on the fact that we do have a 50-day simple moving average working as a support level, which is trending right around 21,300. Then, of course, 50 on the RSI as well. If we take a look at the MACD, though, it is diverging here, of course. So this could imply that we're finally going to see a bit of a downtrend further. So again, kind of conflicting information here on the daily, but I'd much rather trust a support level on the RSI than I would a MACD divergence on the daily. If we see that on the 4 hour, it's a different story, of course, because it carries a little more weight on the shorter term time frames, the midterm, so to speak. But generally speaking, at this point, we've got 7 red candles here in a row. And if we see previously, the price action came down 7 candles before it returned back upwards. Okay. Again, that's just a pattern. It doesn't necessarily have to repeat itself, but generally speaking, we see this continuation to the downside. We should only see 1 or 2 more days of red if it were to continue. But it does look like this price point here, right around 22,500, should likely hold based on that being a Fibonacci retracement level and the RSI potentially bouncing off of 50. Okay, again, stranger things have happened and the price can continue down much further. There's definitely no guarantees in crypto, but for the most part, it's looking slightly more positive than negative on the daily. As far as the 4 hour is concerned here too, let's go ahead and take a quick look. We got a little bit of a reset here with a major, somewhat of a dump this morning from 22.9 to 22.6. So I personally do feel that 22.5 should be the bottom here in the immediate relative, near future. But once again, there's no guarantees on that because we're underneath 2 moving averages now as well. We're staying under the 50-day and the 20-day set moving average for the moment. Taking a look at the RSI as well, we did lose 50 on the RSI some time ago, of course, when the price action came down, sometime yesterday, as a matter of fact. And being under 50 on the RSI is not fantastic. That's disadvantageous there, kind of letting us know that we have more of a short-term or mid-term bearish outlook. And we also see here a MACD divergence, of course, that occurred yesterday, but it's still diverging, so to speak. So it's picking up momentum, whereas the bears are gaining control. What we want to do to kind of offset that and take a look is see where the volume's coming into play here. So if we can see there's a lot more volume in the last 4 hour candlestick before the most recent. Obviously this recent candlestick is fairly new, but what I'm getting at here is we saw a doji candle just before the price action came down. It does tell us there was a lot of buying pressure and a lot of selling pressure, but the bulls essentially are taking a sideline. In other words, they're letting the bears take their profits. So the likelihood of a return from here, I would say, is greater because of the increased volume in that regard. A lot of times when you see an increased volume, the price action ends up going down. It'll come right back up again, especially if it's a bounce off of a key level support. Again, these are not things that are like foolproof, but at this point, if we look at the 4 hour time frame, we can kind of see it's also kind of, I wouldn't say controversial, but it's literally giving us good and bad signals, right? So kind of one of those fair to Midland states, whereas you're probably better off kind of waiting on the sidelines. But something to note and acknowledge here is the 200-day set moving average working its way up concurrent with this trend line. And we've seen it work really well as a support level in the past. So again, the price does end up coming down to this little point of about 22,000. I would say that 22,000 should be the immediate lowest point. But I do feel that 22.5 is going to continue to hold as a support just based on that Fibonacci retracement level and the overall trend on the daily. Looking at the 1 hour, we can kind of see here, of course, we're still underneath the cloud, and right here at this point where it looked like it wanted to break through, it gave us a nice little false positive. This is what I'm talking about too with confirmation, because again, I ended up taking a long position right here with BNB and Bitcoin, right? Bitcoin is still open, it's coming down. I feel like we're still likely to get a bounce and it could return. So, if you're in my trading community, do not worry about that trade. I chose cross leverage for a reason, so it adds to your position and will inevitably come back up. The likelihood of that is fairly high. Once again, the main reason why is because of the big picture outlook here and that we're overextended to the downside with some nice support levels. But what I'm getting at ultimately, though, a lesson to be learned here is, again, price action breaks above the cloud. Never a guarantee that you want to take a long position based on that sentiment alone. Okay, again, you want to have full-on confirmation. The price action should have went sideways for a few more hours and allowed for us to note that it's going to stay above that level, right? So again, this is happening quite a lot lately where the price action breaks above the cloud and it has a tendency of coming right back down. Now, this is a pretty big break, of course, but it started the eventual downtrend. But generally speaking, yeah, the cloud is not, again, it's not a foolproof indicator, but it's nice because it has a lot of built-in qualities. In other words, we're underneath the cloud, we can tell we're in a downtrend, for example. The conversion lines below the baseline still showing us there's momentum to the downtrend. And of course, we've got this lagging span, free and clear price action. So we literally have another 24 hours of potential short benefit. If you have a short position open, leave it open, because there's no signal that it's going to just turn right around. Once again, though, keep in mind, there are definitely some areas here, such as 22,500 and 22,000. As soon as the price action meets this ascending trend line, I think we're going to see some resistance to the upside, or resistance to the downside rather, where it's not going to be able to go much lower because the bears can't sell any more Bitcoin. Everyone's going to want to buy because it's considered to be oversold. So again, handful of different things there, but I would generally say that at this point, we've kind of got that weird state where it's probably best just to kind of avoid taking a trade for the moment until we get some kind of confirmation. And we need confirmation the price isn't going to break any lower. If it does break lower, it's going to continue this trend. I would say another 24 hours, possibly even 48 before you should take another position, just based on the overall sense of things, right? That's generally what we're looking at here. Again, mostly neutral in the overall sense, right? We don't really have like a dramatic, indicator here telling us that it's full-on bullish or bearish. While the short term does indicate bearish, the long term, more so the macro, tells us there's more likelihood for upside than there is further downside. Okay, again, those are things I like to kind of weigh out, so to speak. So when we have this position right now where the short term is bearish and the long term is bullish, it's oftentimes best to wait to take entry. Maybe try to add to your position at the 22.5 level if it comes back down there. But we got to see if it's going to go any lower. We got to kind of wait and be a little more patient, because this dump this morning was really kind of unwarranted in the sense, because you look at the traditional markets, they're really just breaking even today. So it's just this nonsensical sense where the dollar index is actually down and Bitcoin's going down. Typically, it doesn't work out that way, which tells me that the bears are overextended, and I feel that we're going to see a recovery here quite soon. So again, just kind of a gut feeling based on the overall sense of the market and how everything's kind of lining up. Even though the short term is bearish, it could very well be a trap there. So I do think a long position should be viable here in the very near future. So again, I think 22.5, 22.6 should be the immediate bottom. If we lose that, once again, we should be able to maintain this ascending trend. And that's what we need to pay attention to, because again, we're still making higher lows on the macro. This is not concerning at all for the price action to be where it's at. We need to be cautiously optimistic, if you will, which is a term I like to use because honestly, that's really the way it goes right now. You got to be careful, you got to respect the market, but you also want to be mindful of the big picture, and the big picture is still green. Okay, so that to me tells me we're going to see a recovery here soon, especially with the the type of candlesticks we're seeing here. It's a good chance we'll see a turnaround here soon. It looks to be on the overextended side as well. We're 7 days red in a row. It's rare for us to see anything more than 8 or 9 red days in a row. Okay, just something to think about. All right, so that's kind of where we're at there. Hopefully this made sense and I was able to explain that correctly. If you learned something here today, of course, comment below. If you'd like to become a better trader, CryptoCache.tech is a site. Link in the description below. I look forward to working with you. Hope you have a great rest of your day. Thanks again.